Welcome back to Fast Market. I'm Tom White, joined by my co-host, Mr. Kevin Hinks. But let's bring in our next guest, and that's going to be Andy Swan, the co-founder of LikeFolio.com, joining us for a discussion on Chewy. Now, Andy, this stock's down over 33% from hitting those all-time highs above $120. You know, the pandemic really helped them at the beginning, but they got some margin pressures here. What kind of data are you guys seeing as far as purchase intent goes?
Yeah, the stock definitely got ahead of itself. That's obviously clear in hindsight. I think, what we saw really, this is one of those COVID darling type of stocks, that really benefited from the pandemic in a couple of ways. First of all, there was a really big increase in just online shopping in general, which of course Chewy specializes in. And there was also a booming pet business as more and more families brought a new puppy or cat into the home during lockdowns to sort of help with that isolation. So Chewy is a benefit of two very large trends in 2020 that made 2021 comps very difficult. But what we're seeing at LikeFolio is this is one of the most resilient of the companies that we've seen in terms of underlying consumer demand for what the company does. Purchase intent mentions have stabilized recently and actually started to resume back higher, which is a really good sign. But what's especially important about this is that when you're talking about Chewy, it's, purchase intent mentions don't correlate directly to revenue because like Netflix, like a lot of other companies, Chewy actually has a really strong subscription component to its business called Autoship. And if we look at those mentions over the course of time, we actually see that increasing 67% year over year, which tells me that the base of consumers that Chewy has is continuing to grow, that the revenue that they're generating from those consumers is consistent and is becoming more and more consistent. And so when we see that in a company like Chewy, especially after such a sharp decline in the stock price, it starts us to get thinking about opportunity rather than risk, because we think most of the risk for Chewy is in the rearview mirror.
Andy, this has become, as you know, a pretty popular story from 2020 to 2021, right? And the list is long of names: Zoom Video, Teladoc, DocuSign, all these COVID darlings whose stocks got way ahead of themselves have come down big fractions and are now trying to find out where they become valuable again. And so is this company, Chewy, just a really good company that got ahead of itself? The valuations went crazy, came down, and now it's trying to find a level where it finds value. Is this just another one of those names? Because all the companies that I named, they're all good companies. I don't believe any of them are going out of business. They're all growing, but it was their valuation that got ahead of them. So Peloton you can throw in there as well. Yeah. I mean, there's a long list of these names. Isn't this just more examples of that, and we have to find the level where there's value in this company?
Yeah, I think so. I think it's fair to say, I don't think it's fair to say the company got ahead of itself. The company's executing really well. It's the investors in Wall Street and some of us that got ahead of ourselves. And to be fair to the company, last quarter they showed revenue up 24% year over year. They showed an active consumer base up 15% year over year, and Autoship consumer sales up 27% year over year, with sales per customer up year over year. So this is a company that's executing really, really well. It would be frustrating, I think, at this point to be an executive of one of these companies, trying to tell the story that our business is going really well. It was you guys on Wall Street that got ahead of yourselves, and now we're finding water. But I do think that of that bunch, those COVID darlings bunch, Chewy is one that impresses us the most. And it's primarily because what we see in the consumer happiness side, because normally as companies scale, they tend to have problems keeping their existing customer base happy, but it's not the case with Chewy. It's one of the best in the business, best in all businesses that we see, with 82% consumer happiness ratings. And you just don't see that anywhere else in the sector or in really in the world. So Chewy doing a very good job keeping a really happy consumer base for them to build off of and continue to grow this subscription-based business.
Yeah, and Andy, you've got the stock overlaid with that, the purchase intent, and I think that's what people forget about. If you look at this stock from when it debuted in, a couple years ago, I mean, it's still up nearly 70%, so it's had a good run. That pandemic rally, snap rally up to 120 kind of, hurt it if you looked at it on just a one-year chart. But when you look at this and the data that you guys have, are you guys reflecting anything that goes by the way of their connect with the vet or their partnership with Trupanion, which is actually its pet insurance platform? Are you seeing any uptick in any of their satellite, maybe silos of revenue generation that might add to, some of their, mentions and, engagement?
Yeah, no, I think there's a little bit of that, but it's a little early for that. I think that's going to be, most of that's going to be starting in the spring of 2022. But what makes us bullish about those partnerships and the ability for Chewy to successfully navigate those partnerships and monetize those relationships is that consumer happiness level. When you've got an 82% consumer happiness level, you've really got the trust of your user base, of your customer base. And so when you do show them something else that you can do, whether it's connecting them to a vet, connecting them to pet insurance, or even fill their dog prescriptions, they're more likely to trust you than they are the aisle in the grocery store that just happens to have dog food and cat food. So I think they're doing a very good job of establishing relationships with their clients that they can monetize in a variety of ways going forward. And if they continue to keep this consumer happiness level high, we think sky's the limit for Chewy.
Yeah, and full disclosure, use Chewy. The food gets delivered to my door when I need it. But Kevin, did you have another question here for Andy before we let him go?
Yeah, let's talk more about this pet insurance, right? Are we really doing, I know this is a massive industry, pet care in general, be it food, be it healthcare, be it all that. Is pet insurance, Andy, really going to become a new silo of profits for a company like Chewy? I mean, what's next? Pet Social Security? Pet Medicaid? What is the next? What is the continuum for a company like this? I cannot believe we're talking about pet insurance, Andy.
I know. Well, the thing is, after experiencing a year or 18 months or however long it's continuing to go on right now, there's really only a few people or animals in your life that that you can really count on day to day, and those are the ones under your own roof. And so I think people are more likely to spend a buck, on Benson, the dog, than they were a few years back. And so I think that is a growing area. But more importantly for Chewy, it's a brand new area of revenue. They aren't even tapped into that market. So even if that market of pet insurance is stable, Chewy's ability to be the one that determines where customers go for that service is an incredible spot to be and will be very likely highly profitable for them.
Yeah, and just imagine taking your pet to, the vet, and the bills aren't cheap, Kev. So that pet insurance is not a bad way to go about it, as I have that too. So I get it because I've been, shocked when I see a vet bill. So, all right, Andy, great stuff. Positive momentum here for Chewy as far as revenue year over year and some of the data that you have. Appreciate it. Have a great day.
Thanks, you too. Happy New Year.